Good morning. I'm Carol Harmer, and I'm going to look this morning at the euro dollar. The reason for looking at the euro dollar, as you can see, Friday it kissed that 200-day moving average. Okay, now that's coming in, as I said before, at 1584. Hasn't really altered since we went through this last week. Now, what we've seen this morning is the market dip below there to 115.76, but it's overnight in Asia. So when Europe comes in about an hour and a half, we'll see what happens. It's going to take a lot to break that 200-day moving average. As I spoke to you last week, the stochastics and all the other technical indicators that I look at do suggest that we trade higher. Is it because of euro strength? No, I don't think so. I think it's more to do with dollar weakness at the moment, God bless him. But if I put on some Fibonacci's for you, you can see exactly where I think it's going to go. Now, when you get moves like this, you can take the high and the low. Now, if you look there, you can see that the first Fibonacci retracement comes in at 1632. We've gone to 1636, so we've just gone above it. However, we have the 55-day moving average coming in at 1654. And if you look at the 38.2, that's coming in at 1665. So you're going to get a bit of resistance around this area. Buyers down at the lower levels will be looking to cover around this area, 1632 to 1665. Look at the stochastics, they are poised to trade higher. Also, if we look at the Dixie, you can see that the actual opposite is happening. Let me show you. It's tried to go higher. We faltered here. This Friday, it didn't know what it was doing. Now, we have the 55-day moving average coming in at 98.99. Our low has been 99.05. So you can see we've virtually touched it. We've also got the 9-day moving average coming in at 99.07. So you can see where the support has held. Again, look at the indicators. You've got your stochastics at higher levels. I do the 90, 10 area. So you've got them coming in quite high and they're looking to turn, which would show dollar weakness. So, as I've said before, it's a mirror image of the euro. Now, the overall pattern in the euro still at this point remains weak from the weekly charts. So we'll just have a pop over and have a look at those. You can see that the weekly charts here, you've still got the market coming lower. You've still got this topping formation over here. I'll squidgle that up so that's a bit better. You've still got this topping formation here. And really, we need to exceed this before we can take a view that the euro is going to trade higher. So we need to take out this high here. Okay, that is coming in at 1918. Yes, it's a long way from where we are now, but because it's such a slow moving chart, the weekly, what you want to do is just keep your eye on it, because they are good indicators of where the trend is. So although we do have this, you can see it more clearly now, this big topping formation here, as yet we are moving sideways. So when you move sideways, what you need to do is put more emphasis on your stochastics, on your DMI, on your ADX, on any indicator that you look at, really, because they work better in sideways markets. The important point is that the market bounced off its 200-day moving average. as I said repeatedly last time, it's got to break and hold below there to have any chance of getting down to this trend line here, which is coming in at 15.15. Okay, good luck. I will catch you all later.